What's up guys, Alvaro here. Welcome to the Bilingual Stock Market channel again. On this channel, we talk about the markets and we do it in English and Spanish as well, so you can pick your preferred language. And in this video, as I do it Mondays through Thursdays, I want to make a quick stock market update, so I want to break down some technicals, going over the S&P 500 and the Nasdaq 100, and I also want to take a look quickly at the Russell 2000, and at the end of the video I am going to break down from a technical standpoint as well 3 stocks that tomorrow are going to be on the very top of my personal watch list. So without further ado, let's get right into the video. And today we apparently had a mixed day in the markets. We had a horrible day, guys. I will provide some details about it in just a second. So the Russell 2000 as of now is having a 6-day losing streak. It went down 1.22%. Nasdaq went up 0.11%. Say thanks to Microsoft, which reached a new all-time high. In today's trading session, S&P 500 went up 0.13%. We can make the case that both the Nasdaq and the S&P ended up the day flat, and the Dow Jones went down 0.19%. So why did I say that we had a weak day, a day in the markets didn't do much, and why am I actually concerned about what could be potentially happening in the markets in the upcoming days? Okay, guys, what you can see over here are the 11 sectors that trade inside the S&P 500, and the best performing sector. So the sector that did the heavy lifting today was tech, the tech sector. If the tech sector hadn't done the heavy lifting, we would have had an absolute bloodbath in the markets today. So my question, what is going to happen tomorrow or in the upcoming week if the tech sector happens to take a break, and at the same time the other two very important sectors inside the S&P 500, healthcare and financials, also take a rest? If that happens, guys, we are going down in a lot. So I am officially concerned about the weakness that I am seeing all across the board, except for tech. And when I am talking about tech, guys, I am talking about Apple, Microsoft, Google. So only a handful of stocks that are the ones that are doing the heavy lifting. And today we had jobless claims coming out at 348,000, 29,000 fewer from the week before, and below the estimate of the analysts of 365,000 claims. So, and as I said in the video that we posted yesterday, the markets have a lot on their plates right now. We have inflation fears, we have COVID fears, and now we had a jobless claims report that seems to signal that the economy is actually recovering at a good pace. So we have a lot going on as of now. And when there's uncertainty, the markets usually drop. And now let's go ahead and take a look at the S&P 500. And this index was all over the place today, guys. It closed at 4,405 points, 4405, and it went up, as I just said, 0.13%. So the trading as soon as the trading session opened today, we saw a huge drop. The bulls managed to find support at 43.67. Then they were able to take the S&P 500 up to 44.17, and at 44.17 the bulls were rejected on 3 occasions throughout today's trading session. So in terms of overhead resistance, obviously the most important area that we need to keep a close watch on in tomorrow's trading session is going to be 44.17, which is a spot in which the bulls failed on 3 occasions in today's trading session. And in terms of support, the most important area, and taking into account that we closed today's trading session above 4,400, then the most important area, or the most immediate area of lower support, is going to be 4,400. And if that area of lower support happens to be broken to the downside, then we need to keep a close watch on the low point of today's trading session at 43.67. And if I pull up here the 4-hour chart, we can see the RSI of the S&P at 41 points. We are still on an uptrend and trading between the moving averages. So for anyone who takes a look at this 4-hour chart of the S&P 500 and that doesn't realize what is actually going on inside the S&P, well, anyone would believe or think that this index is looking extremely bullish if you don't realize that we have, as of now, only a handful of stocks doing the heavy lifting. And in the case of the Nasdaq 100, we have a similar situation relative to the S&P. So the Nasdaq 100 went up today 0.51%, thanks Microsoft. And it closed today's trading session at 14,933 points. So if I zoom in here on the 4-hour chart, and pretty much, this is the same thing that I just said about the S&P 500. We are on a clear uptrend. We are trading between the moving averages, but only a handful of stocks are doing the heavy lifting. So today we saw a sizable drop. In the case of the Nasdaq 100, the bulls managed to find support at 14,800 points, which was one of the most important areas of lower support that I called out in yesterday's video, and they closed today's trading session slightly above another important area of lower support at 14,900 points, because as I just said, the Nasdaq 100 closed today's trading session at 14,933 points. So in terms of lower support, the most important areas that we need to keep a close watch on tomorrow is going to be obviously 14,900 points, which is a previous area of lower support that already acted as such for the Nasdaq 100 in yesterday's trading session. And we are also talking about a former area of overhead resistance that already acted as such for the Nasdaq 100 back on July 6th. If the 14,900 points happen to be broken to the downside, then the other important area of lower support is obviously going to be the low point of today's trading session at 14,800 points, which acted as a lower support today. It also acted as a lower support back on July 27th. And we are also talking about a former all-time high that also acted as overhead resistance back on July 6th. Other than that, as I just said, we are on a clear uptrend, trading between the moving averages with the RSI at 43 points, very healthy from a technical standpoint. So, and as I just said, in the case of the S&P, the Nasdaq looks very healthy. It is neither overbought nor oversold, and there's nothing wrong with this tape if we didn't know that only a handful of stocks are keeping the markets up. And now let's go ahead and take a look at the Russell 2000, and this isn't looking any good, guys. Take a look at this, and let me pull up here the 10-day 30-minute chart, and the Russell went down today once again, and for 6th day in a row, 1.22%, and it closed today's trading session at 2,132 points. So take a look, guys, at how the Russell has been downtrending. Take a look at this downtrend channel that we can see on the 30-minute chart. So the Russell is clearly downtrending, and I think that this index is due for a relief rally sooner rather than later, guys. We haven't gotten down to 2,100 points. We are getting closer to 2,100 points. So let me draw a line over here. So 2,100 points already acted as a lower support for the Russell 2000 back on July 16. It also did it back on March 25th, and it also did it back on, this was in the beginning of March. And we are also talking about a former area of overhead resistance in which the bulls of the Russell felt back on January 7th. And if we take a look at the RSI of the Russell, it is at 31 points. So the Russell is actually oversold. So I'm thinking, guys, that this index is really due for a relief rally. And maybe a relief rally can start out at 2,100. I don't think it could happen obviously, because when it comes to the markets, we cannot rule out any possibility. But I think that if the Russell happens to hit 2100, the RSI is going to be even lower, and that is going to increase the likelihood for the bulls of the Russell to find support at a previous area of lower support and resistance and then bounce back up, and by doing so having a relief rally that the Russell is needing definitely. And now let's go ahead and take a look at the first stock of this video, Virgin Galactic, SPCE. And this is a stock that you guys are telling me to go over left and right. So let's go ahead and take a look at SPCE, which went down today 3.96%, and it closed today's trading session at $24.25. And let me show you, because as of now, I am holding the bag with good old Virgin Galactic. This is not the first time that I am holding the bag with the stock of this company. So a few days ago, I purchased 50 shares at $27.86. And as of now, I have an unrealized loss of $179. But I am not really worried about that loss. I understand the dynamics through which the stock of this company works. So this is a highly sensitive stock to news. So whenever, or the second, we have another news about another test flight, the stock of this company is going to run higher, no doubt about it. So in the meantime, and while we wait for good news or for some another positive catalyst in the case of Virgin Galactic, my plan when it comes to the position that I just showed you would be purchasing 50 more shares of SPCE if the stock of this company happens to pay a visit down to the next important area of lower support for Virgin Galactic at $23. $23 is a previous area of lower support that already acted as such for the stock of this company back in mid-April, but we are also talking about a former area of lower support that acted as such back in January and also back in mid-December of last year. So if I can purchase 50 more shares at $22, and taking into account that my current average cost for this position is at $27, so I am going to end up having something like an average cost of $25.20 or $26. So for all intents and purposes, my price target in order to close this swing position is going to be $34. $34 is a previous area of lower support that already acted as such for SPC back in June, but we are also talking about a former area of overhead resistance that already acted as such on 1, 2, 3, 4, and 5 occasions before, and on top of that we have the 180 SMA on the 4-hour chart coinciding with a former area of lower support and resistance. So if I happen to be able to execute my plan the way that I am describing it, owning 100 shares of SPC at an average cost of $25.50, and if I happen to sell out of my shares at $33 or $34 each, I could be potentially locking in a profit of 23%. So watch out for Virgin Galactic tomorrow or in the upcoming days, paying a visit down to the lower area of support at $23, finding a good support over there, which could be the case because if we take a look at the RSI, at the relative strength index of Virgin Galactic, it is at 32 points. It is already low. So we can make the case that if the stock of this company drops down further and pays a visit to the $23, the RSI is going to be even lower, and that is going to increase the likelihood for the bulls of SPC to find support at a previous area of lower support and then bounce back up. And the second stock of this video is going to be Zillow, ticker symbol Z. And in the case of Zillow, guys, this is unbelievable. So, I mean, the way that the stock of this company has been beaten down, and I get it, guys, this is from a valuation standpoint, this is an expensive stock. However, the revenue growth that we have seen in the case of Zillow is amazing, and I truly believe that this company is going to be dominating the online real estate industry. And as of now, we find Zillow trading, let me see over here, 60% of its highs. Oh boy. You guys tell me if big money hates higher multiple stocks. So Zillow went down today 2.26% and it closed today's trading session at $91.10. And in the case of Zillow, my plan is going to be very simple, guys. I believe, very simple. I believe that Zillow is about to complete a double bottom formation that could happen tomorrow near $89. Take a look at this. So if Zillow tomorrow happens to pay a visit to the $89.60 or $90 even, we can actually say that also $90 would be a spot in which this double bottom formation could be completed. Then at that price, I am going to be picking up 30 or 40 shares of Zillow, in which case my price target is going to be the next important area of overhead resistance for Zillow near $95. $95 is a spot in which the bulls of Zillow failed back on August 18th, so yesterday. So the bulls of Zillow failed at that price, at that area in yesterday's trading session. So if this double bottom formation happens to be completed, guys, Zillow could easily, the bulls of this stock could easily fill the gap up to the $95, in which case we could be potentially making a profit of almost 6%. So watch out for this possible double bottom formation getting completed in tomorrow's trading session near $89.50 or $90 per share. Now let's go ahead and take a look at the best meme stock out there by far, guys. Bed Bath & Beyond. This stock shouldn't be considered a meme stock, guys. I mean, when we talk about meme stocks, we already know that we are talking about very stretched valuations, and this is a very successful company that is making a lot of money, that actually up-guided during or when its last earnings report came out. So it is considered a meme stock, but this is by far the safest meme stock out there. So Bed Bath & Beyond went down today 0.50% and it closed today's trading session at $25.89. And if tomorrow, guys, this is a scenario that is likely, I would say, and mostly taking into account that most of the small cap stocks are getting absolutely obliterated. So if tomorrow Bbby happens to pay a visit down to the next important area of lower support at $23.70, which is a previous area of lower support that already acted as such for Bbby on 1, 2, 3, and 4 occasions before, and it also acted, now that I am seeing the chart carefully. So we are also talking about a former area of overhead resistance in which the bulls of Bed Bath & Beyond failed back on January 13. So if the stock of this company happens to pay a visit to this spot, and if I happen to confirm from a technical standpoint that a good support was found over there, and that could be the case, because if we take a look at the RSI of Bed Bath & Beyond, and you guys know that, and if you guys have been seeing my videos frequently, that I am a support buyer, guys. I am not a momentum trader. I don't like to buy stocks breaking out from levels of resistance. So most of the stocks that I call out here on the channel are stocks that are going to be backed at levels of support and in an oversold condition. So that's a kind of setup that I am looking for the most part. So, and as I was saying, if tomorrow Bed Bath & Beyond pays a visit down to the $23.80-ish, then that implies that the RSI is going to be lower, and that is going to increase the likelihood for the bulls of Bed Bath & Beyond to find support at a previous area of lower support and resistance, because as I just told you, that area also acted as overhead resistance back in January and then bounced back up. So purchasing shares of Bed Bath & Beyond near $23.80 and selling out of those shares at the next important area of overhead resistance near $27.20, which is a previous area of lower support that already acted as such for Bed Bath back on July 8th. It also acted as an overhead resistance back in the beginning of May, and it also acted as support in March, and also back in late March, and also back in the beginning of March. So at that price, I would be potentially locking in the profit. So if I happen to be able to take this trade the way that I am describing it, purchasing shares near $23.80 and selling out of those shares at $27.50, we are looking at a 27% profit, guys. That's a very solid profit. And take a look at how this 50 SMA on the 4-hour chart is coinciding with the previous area of support and resistance that I just told you, near $27.50. So we can make the case, and obviously basing our case from a technical standpoint, that the second the bulls of Bed Bath & Beyond fill this gap up to $27.50 at that price, at that level, at that area, at $27.50, a huge resistance is going to be found. So watch out for Bed Bath & Beyond tomorrow, or in the course of the upcoming days, paying a visit down to the $23.80, finding a good support over there, and then bouncing back up. And with Bed Bath & Beyond, I am going to wrap up the video. Thank you very much for your attention, and thank you very much for hanging out with me once again. Remember and keep in mind, guys, that here on the Bilingual Stock Market channel, we are posting stock market update videos Mondays through Thursdays, 3 or 4 hours, sometimes 5 hours after the market closes, because we have to record 2 different videos every single day, narrated in 2 different languages, guys. So it is very, but very challenging, and unfortunately, sometimes we are not able to post those videos early. So in these videos, I break down the S&P 500 and the Nasdaq 100. You guys already know what I do in my stock market update video. So if you want to get the notifications of all of our videos in a timely manner, you have to be subscribed to the channel, but you also need to activate the notification bell right up there. So go ahead and activate it. And remember that this is the Bilingual Stock Market channel, the YouTube channel in which we talk about the markets, what we do in English and Spanish as well, so you can pick your preferred language. But most importantly, this is the YouTube channel in which we know that the wonderful world of Wall Street is not for geniuses, it is for entrepreneurs just like you guys and myself. My name is Alvaro, and I will see you guys on Sunday, because on Sundays we also post stock market videos. Peace out, and you guys have a very nice weekend. Bye.